You're not losing because of your strategy. You're losing because you're at war with a part of yourself you didn't even know existed. The market doesn't defeat you. It just exposes what you try to hide. Mark Douglas knew this before becoming a global reference in trading psychology. He lost everything. More than $2 million evaporated, but it wasn't just the money. It was identity, confidence, the feeling of control. What broke was not the account. It was the man. That night, with the screen illuminating the abyss in real time, he realized that all the rules he had written, all the plans, all the discipline, had failed, but not because they were bad. They failed because they weren't enough to bear the weight of invisible wounds. It was the early hours. His wife was sleeping upstairs, the children safe in their beds, and he was there downstairs, destroying the family's future without being able to stop. It wasn't a technical error. It wasn't lack of knowledge. It was something else, an older, deeper force that takes control when everything is at stake. Mark discovered that the disciplined trader is just a mask, that in critical moments, another version of you appears, a version that carries the fear of scarcity, childhood trauma, the desperation of not failing again. And that version is the one trading your account. You may have a plan, you may have backtests, you may have a flawless journal, but none of that will work if you're using the market to try to fix your internal pain. Because the market, in the end, doesn't test your technique. It tests your identity. You're not trading assets. You're trading beliefs. Beliefs about money, about value, about deserving. And if, deep down, you believe you're not worthy of wealth, you will give it all back, always. Mark Douglas lost $2 million, but what he found in the process was worth much more. He found the truth, and the truth is harsh. It has no empathy for your ego. It's not impressed by your setups. It demands that you stop lying to yourself. This video is not about strategies. It's about the mirror, the reflection that appears on the screen every time you click buy or sell. If you have ever looked in the mirror after losing and thought, "Who is this guy?" then you already know. There are many versions of you fighting for control of your account. The FOMO addict, the revenge seeker, the silent saboteur, and they all have access to your capital. The real journey in trading is not about finding the best indicator. It's about discovering which version of you is trading, because until that becomes clear, no strategy will save you. Mark learned this the hard way, but left a warning for those who still want to learn without losing it all. And now, the question remains, who is trading your account? Self-sabotage rarely enters through the front door. It does not announce its arrival. It does not shout. It does not destroy everything at once. It sneaks in. It whispers. A small deviation here. A seemingly harmless thought there. And before you know it, you are no longer trading the market. You are trading to protect the image you built of yourself. Mark Douglas did not break because of a technical failure, or because he didn't understand how the market worked. He broke because, without realizing it, he started to believe he could no longer make mistakes, and that changes everything. From the moment a trader no longer accepts error as part of the process, he is no longer playing the game with the right mindset. He is playing to protect his ego. He is playing to prove he is good. And that is a trap. At first, the plan is clear, well-defined rules, risk management, calibrated mindset. But over time, positive results start to accumulate. Profit turns into identity. The account grows, and with it, the need to be right, to impress, to confirm that you really are different from the others, that you finally made it. And then, without realizing it, the goal changes. You are no longer trying to follow the process. You are trying to maintain the illusion. Self-sabotage does not come from a catastrophic decision. It comes from 1,000 poorly justified micro-decisions. A stop you move. A risk you subtly increase. A trade outside the plan because this time it's different. Small concessions, small deviations, a silent disrespect for your own rules. You still see yourself as a disciplined trader. But what is in control is another part of you, the part that refuses to lose, the part that trades to feed self-esteem, the part that needs to be right to feel safe. That is where the danger lies. Mark lived this firsthand. After a streak of successes, he began to believe he had won, that he had risen above risk, that he had outsmarted the market, that the learning phase was over. And it is precisely at that moment that the mind begins to disconnect from reality, because the market does not forgive that kind of thinking. It does not respect your track record. It does not take into account your good days. It only responds to what you do now. The mind, addicted to being right, begins to manipulate the reading of charts, to distort information, to ignore warning signs, because admitting a mistake would mean admitting you are not as good as you thought, that you are still human, that you are still vulnerable, and that is a truth too hard for the ego to accept. Deep down, this is the origin of self-sabotage. It is not lack of technique. It is not absence of knowledge. It is the refusal to accept that losing is part of it. That error is inevitable. That total control is an illusion. When you don't accept this, you begin to fight the market and yourself at the same time. And that is a war no one wins. The trader's greatest enemy is not volatility. It is not algorithms. It is not the central bank. It is the need to appear invincible. The illusion that there is a perfect version of yourself that never fails. This unrealistic expectation is what destroys consistency, because the more you try to be flawless, the more intolerant you become of the real process of evolution. Mark believed he could control everything, and it was that belief that led him to collapse. He wanted to prove to the world that he was the best, and for that, he began to ignore his own rules. He started trading emotionally, even though he thought he was being rational. He started protecting his self-image instead of protecting his capital. The bride fall came not because he didn't know what to do, but because he stopped doing what he knew. And that is the scariest part, because every trader goes through this point. Everyone has a phase where success starts to become dangerous, where confidence turns into silent arrogance, where the plan, once sacred, becomes too flexible, something negotiable. If you don't pay attention, it is at this moment that the whisper becomes command, that the mind starts trading for you, and when you wake up, it's already too late. This chapter of Mark's story is a warning for all of us. It's not about giant failures. It's about the price of ignoring the subtle, because the market does not destroy the unprepared. It destroys the distracted, those who forgot that the game is internal, those who got lost in the illusion that consistency equals invincibility. The true consistent trader is not the one who avoids mistakes. It's the one who recognizes them quickly, who keeps humility even at the top, who does not fall in love with their own performance, who trades with clarity and coldness even when everything is going well, because they know that is precisely when danger lurks. The enemy will not attack you violently. It will seduce you with small permissions, with small exceptions, and when you realize it, it's no longer you clicking. It's the ego, it's fear, it's pride. Mark Douglas only understood this after losing everything, but you don't have to follow the same path. The warning has been given. The question now is, are you listening? There is a silent trap in success. No one talks about it. Everyone wants to win, but few are prepared for what victory does to the mind. Mark Douglas discovered this in the cruelest way. His success was so fast, so evident, that he began to believe he was above error, and that is where the collapse begins. At first, he followed the plan, executed with coldness, respected the risk, accepted the market as it is, but with the first big profits, a seed was planted. A subtle, almost imperceptible idea. Maybe he was different. Maybe he had mastered the game. Maybe the market was finally on his side. And that is how the ruin of every promising trader begins. Mark started to increase leverage, started to enter bigger, started to shorten analysis time. With every winning trade, he was not just making money. He was trying to confirm that he deserved to be there, that he was special, that he belonged to that world of numbers and inflated egos. But the market has no memory. It does not reward those who want to prove their worth. It does not validate self-esteem. It does not recognize merit. The market only reacts to what is done now, without attachment, without emotion, without personal logic. Mark knew this. Intellectually, he understood every rule. He had read all the books. He had written some himself. But the moment he began trading, based on an identity built by success, he lost neutrality. And without neutrality, there is no consistency. Profit is dangerous because it silences warning signs. When everything is going well, you stop listening, stop reviewing, stop doubting. And in this artificial confidence, you start making decisions based on feelings, not criteria. The trader stops trading the system and starts trading himself. and that never ends well. Mark was not the first to fall into this trap, and he will not be the last. All traders who grow too fast face this crisis. It is a crisis of identity. The account grows, recognitions appears, and with it comes an invisible pressure. Now you have to keep getting it right. Now you have to maintain the level. Now you cannot make mistakes anymore. And when the mistake appears, as it always does, it is seen as a threat to identity, not as part of the process, but as a personal attack. The trader starts to tilt, tries to recover, tries to defend himself, and in this spiral, breaks rules, ignores signals, forces trades, all to protect something that should not be at stake: personal worth itself. Mark reached this point. He did not realize it, but he was no longer trading opportunities, he was trading his own dignity. He wanted to show himself and the world that he deserved the status he had earned, and because of that, he started acting hastily, exposing himself more, taking unnecessary risks, because deep down, he was no longer trading to win. He was trading not to lose who he had become, but the market does not trade with your ego. It does not care about your journey. It does not adjust volatility to protect your narrative. It remains the same impersonal test as always. And when you enter with emotional weight, it responds with mathematical brutality. Mark's account began to fluctuate. Discomfort grew, but he still believed he could control it. After all, he had won before. He just needed one more good trade, one more entry, one more success, and then everything would return to normal. That is the fatal illusion, that the same mindset that built the initial success will be enough to maintain it indefinitely. But what brought you here is not what will keep you here, because with each new level of profit comes a new level of internal testing. The emotional management that worked for $1,000 may not work for 100,000. The structure that held a win may not sustain the weight of public expectation. Initial success tests the trader differently, not with losses, but with promises, with flattery, with the false security that the bad phase will never come again. And that weakens judgment, weakens humility, weakens vigilance, until one day, without warning, the account breaks, and the trader doesn't understand how he got there. Mark understood, but only later, when it was already too late, when destruction had already happened, when the money was already gone. He saw that the fall did not start on the last trade, nor with the final leverage. It started with the first profit that affected his sense of identity. It started when money stopped being a tool and became proof of worth. This is the real danger of success in trading. It masks what still needs to be developed. It hides blind spots. It gives a false sense of control. And when the trader believes he has beaten his own mind, that is precisely when it starts beating him from within. For Mark, success was the beginning of the end, because he was not prepared to deal with the invisible weight that profit brings, because there were still unresolved beliefs, open wounds, hidden fears. And that is why he says the market does not test your system. It tests who you are when no one is watching, when you are alone facing the screen, with the power to click, with total freedom, no boss, no orders, just you, your mind, and the emotional reflection of what you truly believe. If success is greater than your internal structure, it becomes poison, and that is what happened to Mark. Profit blinded him, made him forget why he started, made him ignore the fundamentals. And when the correction came, it did not only correct the account, it corrected the illusion. Every trader needs to remember this. The market does not give you what you deserve. It gives you what your mind is ready to sustain. And if you are not ready, success will destroy you before failure has a chance. Mark Douglas wasn't trading just to make money. At some point, he was trading to feel something. The emotion, the thrill, the adrenaline of pressing the button and watching the numbers dance on the screen, that was addictive. And like any addiction, it started subtly, almost imperceptibly, a small rush of pleasure after each winning trade, a pang of frustration after each loss, but over time, the brain stopped seeking profits. It started seeking the next fix. Dopamine doesn't reward the gain. It rewards the anticipation, the click of the mouse, the sound of the notification, the candle forming on the chart. All of this becomes a cycle of anticipation and relief. The brain learns to associate trading with pleasure, even when the results are negative, and that's when the trap closes. Mark found himself trading at times he once considered reckless, ignoring his own plan, reopening positions right after closing others, not because it made technical sense, but because he needed to. He needed the feeling. He needed the stimulus, like a gambler who says just one more hand will fix everything. He was no longer seeking performance, he was seeking dopamine. The problem is the market is perfect for feeding this addiction. It offers immediate reinforcement. You win or lose in seconds. Every candle is a chance for relief. Every movement is a promise that something big might happen. And the trader begins to justify any entry as valid, as long as it brings some kind of emotion. Mark talked about discipline, but inside, he was at war with chemical impulses he didn't understand. His system didn't fail because it was bad. It failed because it became irrelevant in the face of the emotional need that trading came to satisfy. When dopamine takes control, the market stops being a place for analysis and becomes an emotional casino. You enter and exit, not because you saw an opportunity, but because you need to feel something. The chart becomes a chemical amusement park, and the trader loses the ability to wait, to analyze, to pause, because the silence between trades starts to hurt. Mark realized too late that his mind had been hijacked. He was no longer the strategist who started his career. He was an emotional trader, chasing pleasure spikes, and that destroys more accounts than any financial crisis. When you trade under dopamine's control, no plan will hold. You can write rules, set limits, define goals, but all of it will be swallowed by an invisible need for reward. Logic disappears, patience vanishes, control becomes an illusion. And the worst part is, you keep believing you're in control. After all, you were the one who clicked. It was your decision. But the click was just the end of a chain of impulses that started long before, in anticipation, in craving, in the compulsion for results. Mark Douglas understood that the trader's greatest enemy is not fear. It is pleasure, because pleasure makes you repeat patterns even when they destroy you. Pleasure justifies, pleasure convinces, pleasure masks risk, and the more pleasure trading offers, the harder it is to stop. For many traders, the first big loss doesn't come from a wrong analysis, though. Comes from a cycle of small decisions, all made based on feelings. And those feelings are not random. They are triggered by a brain conditioned to react, not to reflect. Dopamine is the substance of illusion. It makes the trader believe he is progressing, when in reality he is regressing. Makes it seem like he is gaining control, when in fact he is losing it. And in this biochemical theater, accounts break, dreams dissolve, and the trader finds himself trapped in a loop of entry and exit, victory and defeat, euphoria and guilt. Mark only truly broke when he realized he was no longer trading charts. He was trading feelings, and there, in the silence after another loss, he understood that until he dealt with the source of that addiction, no strategy would save him. What breaks the trader is not the mistake. It is the unconscious repetition of the same behavior that, deep down, he already knows doesn't work. And as long as immediate pleasure remains the goal, loss is only a matter of time. Mark Douglas used to say that the market is neutral. It is neither your enemy nor your ally. It simply reacts, like a mirror, and a mirror doesn't forgive. It only reflects. When you look at the chart and see fear, euphoria, anger, or doubt, it's not the market sending those signals. It's your mind projecting old ghosts onto current prices. The chart has no emotion, you do. And it is this fragility that the market exposes, trade after trade. The phrase he repeated became a mantra for many. Traders, you don't trade the market. You trade your interpretation of it. And that changes everything, because that interpretation is not objective. It is shaped by experiences, traumas, expectations, the need to be right, the desire for validation. The candle rises and you don't see an opportunity, you see proof that you were right, or a threat that you will lose again. The candle falls and you don't see a retracement, you see a warning that the world is collapsing. The problem is the market has no patience for unresolved emotions. It is fast, ruthless, and totally indifferent to how you feel. Therefore, those who enter expecting comfort, confirmation, or relief will leave hurt. The market does not comfort. It tests. It doesn't matter if you woke up feeling bad. It doesn't matter if you lost everything yesterday. It will move as it always has. And if you are not emotionally clear, you will read those moves with blurred eyes. Mark Douglas discovered this the hard way. After trading with consistent profits, He began to think he was invincible. He started seeking the market no longer to follow his system, but to confirm his identity. He wanted to prove he was good, that he was in control, that he deserved to be there, and this thirst for validation caused him to distort the simplest chart readings. He started entering trades too early, holding on to losing positions, moving stops not because of technique but because of emotion. He no longer saw patterns, he saw stories he created based on his beliefs. And those stories were dangerous because they seemed logical, they seemed correct, but deep down they were attempts to protect the ego, to avoid the pain of being wrong, to escape the uncertainty every trader must learn to accept. This is where most break down, not due to lack of strategy, but due to excess emotion, the pride of not wanting to admit a loss, the fear of losing again, the anger at giving back profits, the arrogance of believing you can predict the market. All of this blocks proper reading. And when reading is contaminated, execution is blind. The market then responds, not with pity, but with precision. It will give you exactly what you projected. It will validate your fear with a loss. It will inflate your ego with a quick gain, and then take it all back. It will keep you at break even until you go mad, not out of cruelty, but because that is its nature. It simply amplifies who you are inside. And that is why Mark began teaching that the trader's greatest work is not studying the market, but studying oneself. The chart is just the stage. The play happens in the mind. If you trade with clarity, you see what is there. If you trade with internal noise, you see what you want to see, and that difference is costly. Emotional fragility in trading is not something that stays hidden for long. Sooner or later it appears. And when it does, the market charges. Charges with interest. Charges with humiliation. Charges with the repetition of the same mistakes. Because the market will not change to please you, you have to change to trade in harmony. With it, Mark concluded that there is only one way. Purify the mind, remove emotional filters, stop trading to prove something, and start trading with neutrality, like an observer who accepts, acts, and lets go, without attachment, without expectation, without fear. This is the trader's true freedom, when emotion no longer dictates entry, when the chart is just a chart again, when the market can go up or down, and you remain whole because you are no longer trying to heal your wounds with profits. You are trading for the right reason, with the right mindset, and in this state, the market stops being an enemy, becomes a mirror that no longer frightens because you know who you are and you are ready to face the reflection. Mark Douglas, like many traders before and after him, made a mistake that seemed harmless at first, but revealed itself as the subtlest poison of all. He began measuring himself by the outcome of each trade, a winning trade, and he felt like a genius, a losing trade, and everything within him collapsed. It wasn't just the bank account that suffered the impact, it was the sense of identity, the self-validation, the self-esteem. Gradually, Mark stopped being a market operator and became an emotional extension of his results. This is how self-sabotage begins, when you don't separate what you do from who you are. When the chart becomes a mirror of your personal value, you enter a trade, and without realizing it, are putting your dignity at stake. Each candle stops being neutral data and becomes a judgment. If the price moves in your favor, you breathe a sigh of relief. If it moves against you, you feel you have failed as a human being. This is not about strategy. This is about identity. Mark said the true cause of suffering in trading is this toxic fusion between performance and identity. And this happens because we are trained from childhood to associate value with performance. Get good grades, be praised, make a mistake, be punished. We grow up believing we only deserve respect, love, or recognition when we succeed. And we carry this into the market without realizing it. But the market does not educate through rewards, it teaches through uncertainty. And if you only feel good when you win, you will live in a constant state of anguish. With every lost trade, the trader who confuses identity with results feels like a piece of himself is lost, and begins seeking the next trade to compensate, not out of technical conviction, but emotional need. Haste replaces analysis, revenge replaces patience, and the fear of seeming incompetent makes him hold positions that should have been closed. This cycle repeats until the account explodes. And what really explodes is the illusion. Douglas discovered this at rock bottom. After losing everything, he realized the greatest pain was not financial. It was existential. Because he no longer knew who he was without the label of a successful trader, and that forced him to face a harsh truth. He wasn't trying to be a good trader. He was trying to be someone through trading. And as long as that desire was unconscious, he would sabotage any consistency. The cure began when he understood that consistency is not born from the need to be right, but from the ability to stay whole even when wrong. A good trader is not one who is always right, but one who remains faithful to the process, even after a string of losses, who does not let a bad trade define his value, who does not try to regain self-esteem from charts, who understands that results are only feedback, not a verdict on who he is, and that changes everything, because when the trader stops identifying with results, he begins to trade with freedom, not freedom to do whatever he wants, but freedom to follow the plan even when it hurts, to accept a stop without drama, to close the computer with a clear mind, even on a losing day. He no longer needs to win to feel good. He feels good because he is in control of the only thing that matters. His conduct, Mark began teaching that the secret to consistency is not in finding the perfect entry, but in finding the right identity. An identity that does not depend on the chart to feel valid, that does not need daily profits to feel secure, that understands the market is a controlled chaos environment, and that true mastery is not over price, but over oneself. You are not your last trade. You are not your spreadsheet. You are not the pain and L of the month. You are the awareness behind the decisions. And when that awareness is mature, centered, and detached, the market begins to respect you, not because you found a secret, but because you stopped begging for validation. That is where consistency begins, not with a new strategy, but with a new perception of yourself. When you stop using the market to prove something, when you understand the only thing you need to prove is that you can stay faithful to the process even when it does not reward you. Mark Douglas did not become a master because he never made mistakes. He became a master because he learned not to destroy himself when he did. And that may be the most powerful lesson a trader can learn. Discipline is important. Technique is essential. But if you do not separate your identity from your results, sooner or later, you will trade to protect yourself emotionally. And in that state, every decision will be distorted. The market does not demand perfection, but it demands wholeness. And being whole means knowing who you are, even when you lose. For a long time, Mark Douglas believed that the secret to winning in the market was finding the perfect strategy. The ideal combination of setups, indicators, and timing that would put him ahead of others. But this belief led him exactly to the place he feared the most. After blowing up accounts, questioning his sanity, and almost giving up on everything, he realized something that would forever transform his view of trading. The market was not the enemy. It never was. The enemy was within. Then he reversed the question. Instead of trying to understand why the market behaved in a certain way, he started to ask why he himself reacted so destructively to the market, why fear paralyzed him in clear trades, why ego made him double down even against opposing signals, why immediate profit was as addictive as a drug, and why, despite technical knowledge, he couldn't maintain consistency. The answer came with pain, but also clarity. He understood that trading is not a battlefield where you fight the market. It is a mirror reflecting, in real time, everything unresolved inside you. Each candle reveals your level of patience. Each stop tests your level of acceptance. Each gain measures your ability to not be corrupted. The chart is not neutral. It amplifies everything inside you, and if you are not aware of this, you will be manipulated by forces you don't even understand. It was from this realization that Mark began his mental reprogramming. He abandoned the idea of controlling the market and started working to deeply know himself. He created a method based not on technical analysis, but on psychological mastery. A mental training involving understanding his own emotional triggers, recognizing sabotaging behavior patterns, and replacing limiting beliefs with healthy convictions, all with a single goal: to trade with neutrality. Neutrality, for Mark, is not indifference. It is presence, being in the market without needing validation, without seeking revenge, without trying to prove anything to anyone. It is acting with clarity even when everything inside you wants to run, scream, or bet everything. It is having the patience to wait, the humility to accept mistakes, the courage to follow the plan even when it does not reward immediately, And above all, it is trusting probability, not emotional need. He taught that trading well does not mean predicting the market. It means responding to it with balance. True discipline is not forcing the mind to follow rules, but training the mind. So following rules becomes natural. The real risk is not in the chart, but in the trader who acts without self-awareness. And success in trading is an inevitable consequence when the trader stops fighting reality and starts flowing with it. His method became a book, a lecture, a reference. But before all that, it became a personal practice. Mark meditated, wrote journals, observed his reactions like a scientist analyzing patterns. He identified moments when fear took control, noticed how boredom led him to force entries, how pride prevented him from accepting losses, how the desire to be right was stronger than the desire to make money. Each insight moved him away from the illusion of control and closer to lucidity. Gradually, he began to experience a new feeling while trading. It was no longer euphoria nor tension, it was serenity. Trading became a technical execution, not a test. Of identity, stops stopped being punishments and became a natural part of the process. Profit no longer brought emotional explosions, and inner silence made room for something few traders know: clarity. This clarity brought a new kind of power. A calm power, not the arrogant power of one who wants to dominate the market, but the power of one who dominates himself, of one who enters and exits a position with the same tranquility, of one who knows that a trade defines nothing, of one who understood that consistency comes from a stable mind, not a brilliant strategy. Mark said that the destabilized trader always thinks he needs more knowledge. The awakened trader knows he needs less ego, and that the real work is not finding the magic setup, but building a mindset that trades responsibly, consciously, and focused. Because in the end, the market rewards those who act with neutrality amid chaos. This is reprogramming, not changing the chart, but changing what the chart activates inside you. Not beating the market, but stopping, turning the market into the enemy, not trading with fear, but seeing fear as data, not avoiding pain, but learning from it. The trader who understands this stops seeking answers outside and starts developing strength within. Mark Douglas reminds us that the market does not demand perfection. It demands presence, and that the mind was not made for risk. It needs to be trained, because if you do not train it, it will try to protect you in the wrong way. It will prevent gains out of fear of losing. It will force you to enter early out of fear of missing out. It will keep you in bad positions out of fear of admitting error. And until you master this mind, it will control every click you make. Reprogramming is not an event. It is a process, a daily commitment to choose lucidity over impulse, clarity over emotion, the plan over ego, and truth over illusion. Because as long as you see trading as a war, there will always be an enemy. But when you understand that the chart only reflects what is already inside you, everything changes. Mark Douglas did not want to teach you to make money. He wanted to teach you not to lose yourself, because if you don't lose yourself, profit becomes a consequence. But if you try to find yourself in profits, you will always be lost. The end of the line for Mark Douglas was not when he lost everything, it was when he realized that if he did not change internally, he would lose everything again. The money could come back, the account could be recovered, but if the mind remained the same, the cycle would continue. The fall was not a full stop. It was a mirror, and the reflection he saw showed something deeper than a technical error. It showed patterns. It showed repetitions. It showed a cycle he himself fed without realizing. Mark discovered that in trading there is no endgame. There is no moment when you beat the market and that's it. There is no finish line. What exists is an eternal cycle of decisions, emotions, and consequences. And each new day, the market offers you a choice. Either you evolve or you repeat. Either you learn or you pay to learn again. Either you awaken or you keep sleeping. He said the market is the cruelest teacher that exists, because it does not punish you with a low grade. It punishes you with real losses. It does not warn you when you are distracted. It simply dismantles you. It has no patience for your excuses. It only delivers the result of your decisions. And that is why whoever enters this game expecting justice, merit, or logic ends up broken. Because the market does not give you what you want, it gives you what you are. Mark began to understand that each loss hid an unlearned lesson. that each impulse was an untreated trauma, that each sabotage was a rooted belief trying to protect something that no longer made sense. The problem was not the chart. It was the pattern, the mental loop, the autopilot that made the trader press buttons without understanding why, the mind seeking safety in an environment that offers no guarantees, the mind fleeing pain and chasing pleasure, unaware that both are traps. He saw that reading more books was not enough. It was necessary to read himself, observe his thoughts, feel his emotions, question internal truths, because the market does not respond to what you know. It responds to what you believe. And if deep down, you believe you do not deserve, that you will lose, that you are not good enough, then no matter how good your technique is, the result will always be the same. That was the turning point. The moment Mark stopped trying to beat the market and began to beat himself, it was not about making money. It was about stopping self-destruction. It was not about predicting the future. It was about stopping repeating the past. It was not about getting all trades right. It was about being conscious in every decision, because as long as the mind is on autopilot, the result will be predictable and tragic. He began to notice patterns before they manifested. He felt the ego wanting to enter a trade just to prove something. He felt the fear trying to make him exit a trade early. He felt anxiety pushing his hand to the mouse, but now he saw, now he knew, and that knowing changed everything, because when you recognize the emotion, you can choose not to be controlled by it. And that choice, repeated every day, is what builds true consistency. Mark said most traders do not quit for lack of technique. They quit from emotional fatigue, because living in a loop, repeating the same mistakes, losing to the same ghosts, is tiring. The soul tires. And one day, the body gives up. That is why he came to see trading as a path of self-knowledge. Each trade as an exercise in presence, each stop as a chance for humility, each gain as a test of lucidity. This approach changed everything. Not only for him but for thousands of traders who began to follow his teachings, because it puts responsibility where it really is, not in the market, but in the one who trades. And more importantly, it gives power back to the trader, the power to observe oneself, to understand oneself, to transform oneself. But this transformation is not easy. It demands courage. The courage to look inward, to admit that results reflect who you are today, to accept that the problem is not external, it is internal, and to choose, every day, to evolve instead of repeat. The game of trading is infinite because the challenge never ends. You are never ready. There will always be a new emotion to deal with, a new level of pressure, a new mental trap, and for that reason, the true trader does not seek safety, he seeks growth. He does not seek easy wins. He seeks deep awareness. He does not want to get all trades right. He wants to be able to keep going even after mistakes. This is the journey, and that is why Mark Douglas ends his teachings with a simple but powerful truth. The market does not charge you technically, it charges you emotionally. And if you do not learn through understanding, you will learn through pain, but you will learn because the market always teaches, and it does not stop until you listen. Therefore, the true trader is not the one who beats the market. It is the one who beats himself. Every day, it is the one who chooses to look inward. It is the one who faces his patterns. It is the one who learns from his mistakes. It is the one who continues, even when everything around says it's better to stop because he knows the real enemy is not on the chart. It is in the mirror, and he decides to face it head on until the reflection shows not the saboteur anymore, but the master. This is the essence of the infinite game. There are no trophies, no audience, no end, just you, your chart, your mind, and the choice of who you will be every time the market opens. If you've made it this far, it's because you know. The real battle is not in the candles or the indicators, it is inside you. And if this video made you see something that was once invisible, then you have already taken the first step that many never will. Here, we don't just talk about the market, we talk about the mind, truth, evolution. Every week, I bring content that goes straight to the point and truly challenges you. No illusions, no shortcuts, no empty promises. So if you are ready to continue this journey consciously, click subscribe, because the next video might be exactly what will stop you from repeating the mistake that has already cost you too much. Subscribe and let's evolve together. One trade at a time. One truth at a time.